This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose on Monday, extending gains for a second session as U.S. efforts to replenish strategic reserves provided some support, although concerns of crude oversupply and softer fuel demand growth next year persisted. Brent crude futures rose 0.6%, or 48 cents, to $76.32 a barrel by 04:06 GMT, while U.S. West Texas Intermediate crude futures were at $71.61 a barrel, up 0.5%, or 38 cents. Both contracts jumped more than 2% on Friday but fell for the seventh straight week, their longest streak of weekly decline since 2018, on lingering oversupply concerns. Oil producer group OPEC held an event on the sidelines of the COP28 negotiations in Dubai on Sunday aimed at convincing young people to support fossil fuels, whose future has caused deep splits among delegates at the climate summit. Dubbed Special Day, OPEC and the Youth, the event included a presentation at its pavilion on the summit grounds, followed by what it called a campfire chat. Roughly a dozen young people attended, some of them anti-fossil fuel activists. OPEC officials working the event had a simple message. Rapid population growth means oil demand will continue to grow, and renewable energy is expensive and limited.
Moving on to the top news in the energy sector.
U.S. energy firms this week added oil and natural gas rigs for a fourth week in a row for the first time since November 2022, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, rose by 1 to 626 in the week to December 8, its highest since September. Despite this week's rig increase, Baker Hughes said the total count was still down 154, or 20%, below this time last year. The president of the COP28 climate summit on Sunday urged negotiators to work harder to find consensus on a proposed first-of-its-kind deal to phase out the world's use of fossil fuels, as the two-week conference entered its final stage. The talks in Dubai have highlighted deep international divisions over the future role of oil, gas and coal that are complicating efforts by nearly 200 countries to hash out an agreement before the summit's scheduled end on December 12. A coalition of more than 80 countries including the United States, the European Union and small island nations are pushing for an agreement at COP28 that includes language to phase out fossil fuels, the main source of greenhouse gas emissions that scientists blame for global warming. Next, we have the top news in metal markets. Iron ore futures fell on Monday on downbeat investor sentiment due to disappointing data in top consumer China as well as falling demand for the key steelmaking ingredient. The most traded May iron ore on China's Dalian Commodity Exchange, DCE, was down 1.04% at 948 yuan and 50 fen, $131.98, a metric ton, as of 0251 GMT. The benchmark January iron ore on the Singapore Exchange fell 1.38% to $133.65 a ton, as of 0308 GMT. China's consumer prices fell the fastest in 3 years in November, while factory gate deflation deepened, according to data from the National Bureau of Statistics, NBS. This indicates rising deflationary pressure as weak domestic demand casts doubt over the country's economic recovery. Prices of copper and most base metals dropped on Monday as a firmer dollar made the greenback-priced commodities more expensive to holders of other currencies, while traders and investors also eyed key U.S. inflation data. 3-month copper on the London Metal Exchange fell 0.7% to $8,393 per metric ton by 0450 GMT, while the most traded January copper contract on the Shanghai Futures Exchange rose 0.6% to 68,220 yuan, $9,491.87 a ton. The dollar was on the front foot, with a reading on U.S. inflation and the Federal Reserve's last policy meeting for the year likely to set the tone for the week, while rising deflationary pressure in China weighed on the yuan. We will now look at the top news in the agricultural sector. China produced a record corn crop this year, up 4% compared to a year earlier, the National Bureau of Statistics said on Monday, with an increase in the area planted with the grain more than compensating for damage caused by summer typhoons. Output of 288.84 million metric tons matched earlier forecasts by the Agriculture Ministry and adds to bumper corn crops from other big global producers that have weighed on global prices. Corn production in China, the world's number 2 grower, rose as Beijing continued to give subsidies to farmers planting staple grains in a push for food security.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.